Imagine it's the 1980s, a time of big hair, bold fashion, and even bigger financial promises. The government decided to loosen the rules on a group of banks called savings and loans, or S&Ls. The idea was to let them make more money and supercharge the economy. But what happened next was one of the biggest financial train wrecks in American history. Before the 80s, S&Ls were pretty simple. They took your savings and gave out mortgages. But when interest rates skyrocketed in the late 70s, they were in trouble. They were paying high interest to savers, but were stuck earning low interest on old mortgages. So, in 1980 and 1982, Congress deregulated them, basically telling them, go on, get a little wild, invest in commercial real estate, junk bonds, whatever you want. This is where things got out of hand. Think of it like this. Your savings were insured by the government. So, for S&L executives, it was like gambling at a casino with someone else's money. If they won, they got huge bonuses. If they lost, well, the government and ultimately the taxpayers would cover the losses. This is what economists call a moral hazard, and it created a Wild West mentality. Many S&L bosses went on a frenzy, pouring billions of depositors' money into speculative real estate projects, luxury resorts, and even risky art collections. Fraud was rampant. They cooked the books, hired friendly appraisers to inflate property values, and handed out loans to buddies without proper checks. It was a classic case of greed running wild. For a while, the party raged on. But then the real estate market hit a wall. All those risky investments came crashing down. S&Ls started failing by the dozens, then by the hundreds. Across the country, over 1,000 of these institutions went bankrupt. The entire system was on the verge of collapse. So who paid for this massive party? You guessed it, the American taxpayer. The government had to step in with a colossal bailout to cover the insured deposits. The final bill was staggering, around $160 billion. That's billions of public money used to clean up a mess created by private greed and lax government oversight. The S&L crisis is a powerful and expensive lesson. It shows what can happen when financial deregulation isn't paired with strong supervision. It's a stark reminder that when the promise of easy money meets unchecked risk, it's often the public that's left holding the bag. Thanks for watching. If you found this dive into financial history interesting, don't forget to hit that like button and subscribe for more content. See you in the next video.